Hello, welcome back to another video of my tutorial series. And today I will expand a little bit more on the moving average. I discussed the 20-day, 50-day, 100-day, 200-day moving average on one of the very first video of this series. But today I'm going to focus on the 20-day moving average. It is a very important indicator for me, being that I am a swing trader, a short-term trader. So for any given stock, you can open up any chart and you can see a very clear pattern on how the 20-day moving average behave and how the stock behave with the 20-day moving average. For example, Pfizer, a big dog of 2023. And no doubt, if you look at the 20-day moving average, for the most part, it was a resistant. The stock trade below most of the time. Okay, it seems like every time it get there, it back off. If it get over it, it barely get over it, it struggle, and it get down below. It tried to break out, it failed. It tried to break out, doesn't last more than 2 or 3 weeks, right? And below. It ride the wave down, resistant, 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 see, reject, reject, reject. Finally, it break out. For the first time, we can have a breakout and a check back. Now, if Pfizer can hold this check back, okay, whenever you have a breakout, I look for a check back that hold. If it holds this check back, then perhaps it's time to add to my long-term position. Okay, it has been a dog for a long. I have not added into Pfizer forever, right? I had a small position that I thought should do well in 2023. Wrong. And my bad for not setting a stop and get out at 34. Okay, this was the fake out that I thought was gonna do it. Okay, I saw this breakout, check back, and I said to myself, "Oh, it's here." After 4 months, 5 months of downward movement, and then it gap below, and then forget it. All right, so I kind of leave it alone. It's a small position. I just refuse to add any more to it until I see another better spot to add, and I think we could get there. So as you can see, on a downward movement, it act more like a resistance, right? Now, if you look at something that is a stronger stock, for example, let's take a look at Tesla. Look, break out over the 20, very strong. Okay, you can go long, stay long until it break the 20, and then you likely should be stop out, right? Now, does that mean that you're gonna jump in right here? You can, but I tend to advise people like not to be so hurry to jump in. But if you do jump in on a move over the 20, at least buy small. Okay, part of what this video is about is learning how to scale into a position, because sometimes it can be a failed breakout, right? Like this example, you get a failed breakout, and then once again, it spent another month below the 20 or longer. It's longer than 1 month, more like 6 weeks from here to here. Okay, and then you get the breakout, and then you get the move, right? Sure. If you want confirmation to buy small and then add here and then let it run, you can. But for sure, pay attention to the trend line, to the channel, right? Surely it's a screaming sell right here, screaming trim. So scaling in, scaling out is very important in swing trading. You can't just go all in, all out. That's arrogant. That's thinking that you can call the top. But as you can see, if it's a bullish environment for Tesla, surely it can hold the 20 like it did here. And then once again, it tests the channel high. Check back, trying to break out. And then the rug pull. Okay, once the rug pull, and failed the 20, look, it's another 5+ weeks, almost 6 weeks under the 20. See, so once it breaks the 20, hopefully you have a stop in, right? And then you can repeat the pattern. But now the stock start to go sideways. So now the 20 MA is no longer rolling up. It start to roll sideways. So be careful. The bottom line is, on a strong stock, on a growth stock, on a momentum stock, the 20 is a very good indicator of a support compared to a resistance like we saw in the Pfizer chart. But now the Tesla is consolidating, going sideways. Watch out. Okay, it can be trading up and down above the 20 for a while, and that's never an easy task to do. It's easier to trade a stock when it's on an up move, upswing like this, the first 6 or 7 months of last year, right, until July. And after that, I'm sure it has been a frustration, especially now that it fell out of this up channel and failed to get back inside the channel. So always when you use any indicator in TA, you have to take a look at the whole picture. That's why the more you look at the chart, the more you can identify channel, support, resistance, the more you can find confluences of these data points to strengthen your position as far as, a good spot to buy or a good spot to sell. Hopefully this video makes some sense. Thank you for watching. Bye-bye.